Hey there, and welcome to today's Daily Premium Newsletter for May 15th, 2018. So the market dropped slightly today, marking nearly a week of bearish movement. That being said, we had some massive developments today that are definitely worth looking over. For one, Coinbase announced an impressive 4 new products today aimed at institutional investors. The 4 products announced today, Coinbase Custody, Coinbase Markets, the Coinbase Institutional Coverage Group, and Coinbase Prime, are all focused on institutional investors and helping them enter the space. With specific concern paid to security and regulatory compliance, we see this as Coinbase moving the space forward. For the average retail investor, this is extremely good news, as more money will be entering the space as a result. At the same time, trading platforms such as Coinbase Prime clearly give advantages to institutional traders over retail traders. As we've said in the past, institutional traders will roll over retail traders due to their experience and large order sizes. That being said, one advantage that current retail traders have is that they got into the space first, so regardless, they'll see their portfolios increase as more money enters the space. We mentioned previously that Coinbase has been on a hiring spree recently to support an upcoming announcement, and it looks like today's move confirms their intentions to bring traditional finance to crypto in a big way. Of these announcements, we're most interested in the custody program, which will make crypto easier to own for the average investor. Regardless of where you think crypto is headed or where it should go, that is a very noble goal. In other news, as we discussed last week, the South Korean police raided the headquarters of Upbit, a South Korean exchange, to investigate possible fraud practices. The police had received tips that the exchange had been processing trades without actually holding users' funds on their platform. Operating order books without storing cryptocurrencies and pretending to hold large amounts of user funds would be a serious offense, and sent the market into a panic last Thursday. We've now received several insider sources that have stated their investigation stemmed from a liquidity issue and a misunderstanding by the police and Korean regulatory agencies. Upbit only operates trading pairs of around 90 cryptocurrencies, but they have over 130 cryptocurrencies listed on their platform. This is because Upbit shares liquidity with other exchanges. Once again, we see the growing pains of traditional systems failing to understand the conventions of this new space. Meanwhile, today marked the highly anticipated Bitcoin Cash hard fork, a move designed to add opcodes to the network and upgrade the block sizes to the Bitcoin Cash blockchain. This upgrade moves the block size from 8 megabytes to 32 megabytes, improving transaction efficiency and scalability. 32 megabytes was chosen due to some limitations in how the client itself currently handles networking. And furthermore, it's just how the client was originally coded. When it was built, it was thought that 32 megabytes would be more than enough for many years. With some changes to the protocol, they can go beyond this limitation, and further scaling technology, like graphene, is already being tested. Essentially, it isn't about today's average block sizes. It's about ensuring the network can deal with huge traffic spikes when needed and continues working for several years from now without having to worry about hitting the upper limit. In other news today, we were excited to see the world's 5th biggest bank, Mitsubishi UFG Financial Group, announce they will trial a cryptocurrency as early as next year in limited areas in Japan. MUFG coin will be tested with 100,000 MUFG bank account holders, who will be able to turn their fiat deposits into coins through a phone-based wallet app. 1 MUFG will be worth 1 yen, and the bank will be working with local businesses to accept it. Once the account holders have the coins, they'll be able to use it as ordinary money for paying in bars and shops that accept it. While this isn't quite the future that we'd like to see, banks issuing crypto, we do see this as a very important step forward. For such a large bank to be so on board with crypto that they're issuing their own coin is a big milestone for this space. Another big milestone today is Amazon's Web Services is looking to make it easier for customers to use blockchain with a new partnership they just announced. The tech giant will team up with a new startup called Kaleido, which was created out of the blockchain incubator Consensus. The startup is aiming to give AWS customers an easy button to get into blockchain. Overall, I see this as increasingly becoming the case as we move forward, and it highlights why platforms are one of the best investments to go after right now. Overall, today's market again does not reflect the massive developments that are hitting the space right now, which makes us certain that any recovery is going to be very fast to the upside with such suppressed price movement. And so for his thoughts about today's market, I'll turn it over to Doc. Have a great rest of your day. We'll talk to you tomorrow.
Good evening, folks. It's Doc for ReadySetCrypto. Tonight, what I wanted to talk to you about, since we have kind of a soft market out there. Now, what do we do if the markets continue to sell down? What if we don't get the recovery rally that we talked about last night? What happens if Bitcoin or some of the other large cap coins continue to head lower? Is there anything that we can do? Well, yes, there is. There's a couple of ways that we can do this. Now, first of all, there's a couple of brokers that are out there. These are crypto brokers such as Poloniex is one of them, as well as Bitfinex is another one. that will allow you to sell short certain coins, such as Bitcoin and Ethereum and so forth. Now, selling short means that you have to borrow Bitcoin or whatever coin from your broker. You have to borrow that and then sell it to open the transaction. So what you want to do is if you sell to open up here, so we're going to sell to open something up here, and then we want it to drop in price down to here, and then we'll buy it back. So it's the exact opposite. So this would be a buy to close at a lower price. Now, what's the problem with this? What is the problem with this? I mean, it's just simply a reverse transaction. It's simply the opposite of a normal long transaction where we buy to open and then sell to close. You know, so we buy to open, sell to close up here. So we're just doing the opposite here. The problem is risk management. This is a market that generally does go higher. And when it does go higher, it goes dramatically higher. In other words, there is unlimited risk. Now think about this. When I set up a fixed risk position at 2%, so I set 2% of my capital, and perhaps I'm going to put so many Satoshis into the position, or maybe $100 worth of fiat equivalent into the position. That's as much as I can lose on the position. If it's long, if I bought that amount of Bitcoin, it could go to zero, and that's as low as it can go. However, if I do the opposite here, if I sell to open this coin, and instead of going down, so my profits would be maximized if the coin went to zero. What happens if on the other side, the coin actually starts to rise in price? What happens if I get myself into a short squeeze? This is where you have unlimited loss to the upside. And what will happen is what's called a margin call. So your broker will figure out how much capital you can afford to lose, and we'll set up a margin call for you, and they'll take care of it. They will liquidate your position and pretty much cash settle what's left of it. So if you haven't got the impression by now, is that yes, you can sell short on a couple of different brokers out there, Poloniex and Bitfinex, but I don't want you doing it. I don't want you doing it because I've seen how it's destroyed other people and many, many other forms of assets that are tradable. So what I'd like to bring to your attention is derivative. And I can't wait for these derivatives to be created and applied to the cryptocurrency markets. It obviously will be applied to the larger coins first. So there are companies that are out there like Deribit and BitMEX and so forth that are more, depends on what country that you live in, will affect your ability to use the exchange, those kind of things. So they're not universally applicable across markets. That will change in time as more volume and more money gets driven into this, as more institutional investors get involved in the crypto market. You're going to see more and more demand for derivatives to be able to hedge the risk. And so one that I'd like to bring to your attention today is one that you've maybe heard about and maybe don't know anything about, but it's right now, it's something that you can trade on your normal broker. This is a Thinkorswim account through TD Ameritrade. And this is a simulated trading interface because I'd like to be able to make a little bit of a mess here and put some positions on without causing any risk to myself. But I wanted to kind of show you the contract specifications here. And I think you'd be surprised how simple this is. Now, in practice, it's not quite that simple because there's a few things that we have to look out for, as we'll go into. So I don't want you to spend any time looking at the chart or the colorful studies down here or anything like that. It really doesn't matter. Where we want to spend our attention is over here on what's called the DOM, depth of market. And as you can see, there's not a whole lot of depth of market here. There's not many bids and offers sitting on there. But this is Bitcoin, and this is the XBT contract. This is the CBOE Bitcoin futures contract. Now, we zoom in on here, what we're going to find is that the price of Bitcoin is going to be listed in $5 increments. $5 increments. And one contract, here's the cool part, okay? One contract of these, you don't buy it. You almost like rent the contract. So you don't have to buy this at $8,500, right? So what I want to do here is I'm going to pretend to buy one contract. So I'm going to go down here and say that I want to buy, well, let's just do a single here. I'm going to do buy one contract down here. And again, this is a simulation, and it's going to show me that my buying power effect is going to be affected by about $3,800 for one contract. Now, that's to go long. So first of all, renting the contract is going to set aside $3,800 in my account, which I can't trade. So this is not something that you can trade with a little micro account or a $500 account. You will need probably at least a $5,000 account to be able to be set up for futures trading under this. Now, I can trade these as much or as often as I want to. I could literally do 500 trades in a day if I wanted to, and there's no regulatory body that's going to come along and say, you can't do that, or you're now a pattern day trader, we're going to charge you more margin for that. So this is the great thing about futures, is that they're normally very liquid, they're very tradable, you can trade in and out of them all day long, and all you're going to be charged is commission. And of course, as long as you hold the contract, you are going to have the margin against you. Okay, so how do these work? How do these work? So again, I'm not going to do it this way, but for every increment, so let's say I go long here, I buy in at 85.15 to Bitcoin. I go long. This is the notation here, is that I go long Bitcoin, because I can go over here and go short. I can trade this both ways, and it doesn't have the same limitations as it would be selling short. Nobody's going to charge me an interest rate for borrowing the Bitcoin to sell short. So there's so many more advantages to using futures contracts here. So if I go long one contract, so if I feel that the price is going to go higher from here, each tick that the price goes up, and this is so slow right now, I wish you could see the price moving up and down, but this is typically the time of evening here on the East Coast, where the Pacific markets have not opened up yet, and London's asleep, and all of Europe is pretty much asleep right now. So we get very, very slow markets around this time. So you're not going to see much at all going on here. But if I did go long on this, and if the price ticks up one, my position now increments in value $5. 2 ticks, now it's up $10. 3 ticks, $15. So it's very linear. It's very linear. And so I can simply set, now this is where it's really cool, is I can set up things like a one cancels other. So I can set up a bracket order here. And this is what I love to do with futures contracts, is I can set up a bracket order to do something like this. So in other words, I can go long here. I can buy this and go long. And I may as well, it's not going to hurt me to do this. Okay, so now I'm long, and if the price comes up to here, it's got a limit order to get me out at 85.45. However, if the price drops down to here, it's going to sell me out of the position and clean up the other side. One cancels other. So this is what's called a bracket order in the dome, or depth of market. Now at any time, now you can see the price has actually come down just a little bit, so it's now, we're seeing a difference in price now. It's come down in value by $15, so it's actually down 3 ticks, because that's the only offer that's out there right now, and not because the price has moved at all. Okay, so if I want to at any time, I can flatten the position. I can just say, yes, flatten me, get me out of this thing, I'm out of here. Okay, so I can flatten the position, get out of it. So I can buy at the market. You don't want to do that. Sell at the market. You don't want to do that. You want to use limit orders. You can use a bracket like this, right? So this is one way to do it. Now, you may have also heard of the CME contract, which is the Chicago Mercantile Exchange. That is a different contract spec. This is over here, and it's called BTC. BTC is the ticker. Okay, you'll recognize this looks the same. It's the same price chart and everything like that. This one's a little bit different, though. This one's a little bit different. So let's do this. If I go over here to, and I'm going to undo the auto send. If I go over here and I'm going to put a limit order down here, I want you to see that this is a little bit different contract. Okay. So notice that the buying power effect for one contract is now $20,000. This is a behemoth contract. This is huge contract. This is one that you should not be trading. This is more of an institutional instrument. Okay, what you're going to find is that each tick, and when I say by tick, I mean each increment in price. So if it goes 84.80, 84.85, that's one tick. Each tick in price is going to affect the contract value by $25. So this contract is 5 times bigger than the CBOE contract, which I just showed you a couple of minutes ago. So quite clearly, this is an institutional contract. This has way too much leverage unless you have a large account and you need some heavy-duty hedging to the downside, right? So if you have an overly long crypto portfolio, then you can hedge using these futures. Now, this should sort of get the wheels turning. So there's a lot of different ways that you can trade these futures. You can either hedge them, just hold them and hedge them. You saw what the margin was. You got to be able to have at least another $21,000 sitting around to hold these overnight. Just to hold one contract overnight requires $21,000 or $3,800 for the CBOE contract. So let me wrap this up here. I think what will happen is over time, so here we are, we're halfway through 2018 almost. Seems impossible. But I would say as we get closer to the end of this year and especially into 2019, 2020, as crypto becomes more and more mature as a financial market, you will see more and more of these derivative instruments. So whether they're futures contracts, you'll see other instruments having futures contracts, so it's not going to be beyond the realm of possibility to see Ethereum or maybe some of the other top 10 to have their own futures contract, depending on the demand for that. Right now, Bitcoin is the only game in town for this. But you will also see different instruments that will have options to them. Now, I'm not talking about binary options, and I'm not talking about the stuff that BitMEX does, but actual options that decay. So all of a sudden, we'll be talking about income strategies and ways that we can set up option strategies such as iron condors, or you can even do what are called covered calls or short puts. There's all kinds of different ways to do this. So for those of you that do have experience in the equity markets with derivatives and options, I think the story will continue to get better and better and better as this market matures. So in the meantime, just for now, I would encourage you to check into if your broker does offer futures trading. If you don't have a futures account set up with them, I would encourage you to do that. And again, you're not going to find this on any fiat brokers, any crypto fiat brokers. You're not going to find this on any altcoin brokers. You're not going to find this on Binance or anything like that. This is going to be found on brokers that do interface with the CBOE and CME. So both of those are in Chicago. Chicago Board Options Exchange, CBOE, and the Chicago Mercantile Exchange. So most of the large U.S. brokers and some international firms as well too, like Interactive Brokers, also offer access into this and offer ways into these futures. So again, I think this is across the board. Derivatives are going to be the way to go, especially for those of you with smaller accounts that want to do a better job of risk management, want more nimble and effective trading instruments. This is going to be the way to go. All right, that is it for today's report. Thanks for listening. We'll see you tomorrow.